Eric Mwathe for the weekend of May 10th and May 11th, 2014. Let's take a look at how markets ended on Friday, with the Dow slightly up, actually closing at all-time weekly and daily closing highs. Nasdaq was up slightly, about 0.5. S&P 500 was also to the upside slightly. We see that the biggest mover here was the VIX, not surprisingly, down about 3.8%. And for the week, we see that the S&P 500 actually ended the week down slightly, about 3 points lower. And we see that the Dow ended the week with about 70-point gain there, or 0.43%. And for the week, we see that the Nasdaq was down the most, about 1.26%. Now let's take a look at the charts here to see what we have. What is really surprising as far as I'm concerned is the fact that the Nasdaq held above the 50 level on the weekly after spending most of the time below 50. And so that is a sign of strength. It also seems to have held at the 33-week moving average, which is also a sign of health. And remember, we go back a couple of weeks when we found support on the RSI weekly lows line, which is also another sign of a healthy market. Now, if you take a look at the Dow, so the question is, if the Dow is closing at all-time highs, and we see that the Nasdaq is struggling, so we have to ask ourselves, is the Dow gonna come and be in sync with the Nasdaq, or is the Nasdaq gonna have to catch up with the Dow? And that's, it's gonna have to play out one way. Either the Nasdaq rallies and catches up with the Dow at some point, or the Dow pulls back just like the Nasdaq has been doing. My thinking right now is more than likely the Nasdaq catches up, and I'll show you the last chart on this on the Russell 2000 daily that tells me more than likely that the Nasdaq could actually catch up with the Dow and the S&P 500. That's my thinking for now. Now, of course, if we find ourselves below this support line on the weekly RSI, then all bets are off, and the Dow and the S&P 500 are going to have to catch up with the Nasdaq, which is in serious pullback mode, especially in some sectors and in some stocks. So now if we take a look at the Dow weekly, we see that this is week number 2. So this is a follow-through week after breaking out above 16,478. And this is surprising, actually, that the Dow is actually showing that kind of strength. So as long as the Dow is holding above 16,478, then we have to assume that the bulls are in control. So the breakout continues, and so we have to assume, as for now, this is a bullish market. Anything back below that level, then maybe you can start arguing that the market is breaking down. But the breakout continues, and we have to respect that as investors. If you take a look at the Dow Transports, this is week number 2, also following through 2 weeks back to back after breaking out above 75.92. So even here we see signs of a strong market. Now if you take a look at the S&P 500, yes, it closed down for the week, but it also closed about 40 cents above the previous weekly closing high of 1878. So it's still holding above that. We'll see what happens. Of course, I'm watching the back test of this line here. So this line is, I believe, it needs to be above this line if it's going to continue pushing higher. Now, let's take a look at the daily chart for the Dow. Actually, the daily chart for the Nasdaq, and this line here is the line I've been talking to you guys over the last couple of weeks, that you would expect the market eventually to defend this level. And as of right now, you can see we are holding above that, or trading in that area there. My thinking here is that if the market can hold this trend line here, which is also an area above the 200-day moving average, and also hold the RSI support line here, then we move higher. Very simple. On the other hand, should we break that, and should we break this RSI support line, then the Dow and the S&P 500 are going to have to pull back. So right now it looks like the market wants to find support. As you can see, this line, very simple line here, is holding on the daily. If it's holding, you have to conclude that the market wants to move higher. If you take a look at the Dow again, just to repeat here, we are trading in this wedge on the Dow. This wedge is probably the entire 2014 trading on the market. So we began the market, and so since then we've been trading in this narrowing wedge. If the market can break out here, that's going to be very powerful. And also at the same time, if the market breaks down and trades below that wedge here, that would be a break. And so we are within the wedge. We have to wait to see what the market does here. On the daily, we close at all-time daily closing highs there. So that's at least going into the weekend here. We see that the market is still, believe it or not, doing very well. If you take a look at the transports have this line here where they've been finding resistance on the top side, and that resistance on the daily continues being the case. If the market can't move above this line, then eventually we are going to have to pull back. But if the market can figure out a way and break out above that, then that's just going to reinforce the fact that the market is poised to go higher. Now, if we take a look at the S&P 500 daily, you see that we still have this, what seems to me like to be a potential head and shoulders formation. Not that much right now, because this shoulder here is not, seems to be a consolidation period. So I would say probably not a head and shoulders for now. What we need the market to do here, for those of you who want the market to go higher, is you want the market to move above this declining RSI level. The S&P 500 completely has been finding it difficult to move above that. So a breakout will be very bullish. Otherwise, this is not what you want to see when a market is moving high. You want to see the market to break above resistance levels if it's going to sustain the energy for higher prices. If you take a look at the S&P 500 60-minute chart, you can see that ever since we made this intraday high here on an hourly basis, draw a straight line from there, this has become a serious area of resistance. It was a trap here before the market pulled back, was resistance here, and multiple occasions here, and over the last day or two was resistance there. So the market really has to take that out if it's going to do well. Otherwise, this resistance is something that if you're bearish, you can at least, lean your thinking towards and say, if the market is going to break out above this level here of about 1885, then maybe the market moves higher. Otherwise, anything below 1885, which is this level here, shows that the market does not have enough energy to break out. On the hourly, you got top side resistance, and also you got bottom side support. So for the market to do well, it needs to break out. And for the market to, if the market is going to break down, then it's going to have to break this line. So we're going to have to watch these two lines over the coming days. Probably might even take a week or so. Sometimes it takes a while. Take a look at the 30-minute for the S&P 500. Again, you see that this level here seems to be some type of short-term resistance here, same as on the previous chart on the hourly, and you got top side resistance here. Ever since we hit that high there, that was the high. We've struggled to hold up. We struggled there, was short-term high there. Recently, the last day or two, hit that level and pull back, which was here. So the market can't not do much until it breaks out. And we see that we already have downside support here, which is where the market has been bouncing off, especially coming into Friday's session. If you take a look at the QQQ, just want to show you this simple line here, which is the top side of the wedge, or this long-term trend line or trend channel. So as long as the market is holding above this level here, anything above that tells me that the market is still strong. If the market moves back into the channel, then maybe it's losing its momentum. For now, it's trading at the channel line, so we must have to just wait and see what happens. A bounce above that line will be very bullish. Now, if you take a look at the VIX, down almost 4% for the week, and really there's not a lot of momentum here. Just because since the last time we came and hit this resistance level here on the top side, which is one way to draw it, or you can draw it like that. So the market is not going to be selling off unless the VIX can move above the top lines on the RSI. So I don't see any indication on this chart that the VIX is about to break out. So I think the market is looking to go high just based on the fact that the VIX is not breaking out. for the VIX to spike, it needs to move above this declining line here. So the VIX has to spike above this line, just like the last time the VIX had a spike was here, had this nice move, and it all began once it moved above this level here. So until we can find ourselves trading above that declining line here, we have to conclude that the VIX has no momentum at all, and the market should be relatively safe to the upside. Let's take a look at Apple here, and you can see I've been talking about the back test of this monthly line here, and this, ever since we broke down below that trend line there, we've hit that line once before, and now we are back at this line. So I would say unless the stock can move above 600, I think it stalls. I think it stalls around here. And you can also see the same chart on the weekly. This is almost a 5-year weekly chart for the Apple stock, and this red line here, you can see that it tells you when the stock broke down, and since then this has turned into a back test. We failed once here, and this, unless the stock can move above that line, this seems like resistance. And last weekend I talked about this level here being resistance also. You can see that that was the break here at about 670, 650, broke down here, which is here, and we've hit that level once before there, and now we seem to be coiling at that level. So to me, more than likely the stock is gonna struggle unless it can move above 600. Now let's take a look at one more chart. I promised you the chart for the Russell 2000, and if it can hold above the 50, if it can hold above the 200-day moving average, then the market is going to have to push the technology to catch up with the large cap major averages like the S&P 500 and the Dow. Now on the daily, I was talking about this support line here. If the Russell can move above this line here, which is what it's trying to do, the market moves higher. This line has been very productive ever since it broke out here, which was these lows here. It's been finding support on this line consistently. In fact, even that low there, this low here was this low, and this low here was that low. Perfect entry into the market every time. Here, which was here, support there, which was this entry, and you can see finding support here. If the market moves the RSI above that line, and if it can hold above the 200-day moving average, then the technology, the Nasdaq sector of the market is going to catch up with the Dow and the S&P 500.